Welcome, this is Will Allen with Sentara Capital. Well, it's Thanksgiving week, certainly one of my favorite holidays of the year. And today, the Dow Jones Industrial Average hit 30,000 for the first time. We're going to take a look at what's driving the action. Let's dive in. We have seen a strong market rally off the October lows, and if you take a look at this chart, what you will notice is that the Dow Jones and the S&P have made up a little bit of ground on the tech-heavy NASDAQ. Earlier in the year and through the summer, tech stocks were vastly outperforming other segments of the market because a lot of the tech companies were able to still fare well when everybody was kind of working from home, when there were a lot of lockdowns, etc. But we have seen a recovery not just in the Dow and the S&P of late, but also small caps and specific sectors in the market like industrials and financials have done well recently. One of the driving factors behind that move have been the last 3 weeks. We've had an announcement each week of a different vaccine. Pfizer, Moderna, and AstraZeneca, all three had over 90% success rates, which were far better than what projections were going to be. A lot of scientists were looking at 60-65% success rates. So that's really, really good news. Obviously, it's going to take time to get these vaccines out. We know that. This is not an overnight fix by any means, but it's very, very strong, very positive, and that has certainly helped the markets over the last couple weeks. Also, yesterday it was announced that Janet Yellen is going to be Joe Biden's pick for Treasury Secretary, and the market reacted strongly to that because they know Yellen well. She was the Fed chair in the going back 8-10 years through 2016, and she did a good job there, kept interest rates low for a while, and allowed the economy to rebound off the financial crisis. And again, the markets feel like, hey, we know Janet Yellen. We think she'll work well with Jerome Powell if he stays as Fed chair. And that is a comforting combo for the markets as they look out, over the next 1 to 2 years. Another positive development has been the recent outperformance of international stocks, emerging market stocks as well. These are categories that for the last 6 to 8 years, they have really underperformed here in the U.S. And economic growth in a lot of those countries had kind of lagged behind. But recently, we have seen a lot of these markets doing really well, and that is positive for the U.S. because about 50% of the revenue in the S&P 500 here in the U.S. comes from overseas, actually. And international stocks doing well now is the markets looking forward to 2021 when we have these vaccines and saying that they do believe economic growth is going to rebound strongly internationally. That would be a real positive in a lot of ways, and we hope to continue to see international stocks performing well. While we have the Dow Jones hitting 30,000 for the first time today, and a lot of other stocks also hitting highs very recently, we also want to do a good job here of trying to look out and see what could come next that could trip these markets up. And a couple things stand out right now. One thing we want to keep an eye on is investor sentiment. And if you take a look at this chart, this measures investors, how bullish they are relative to those who are bearish. And when you see this going higher, it means investors are getting more bullish, less bearish. And when it's lower, the opposite is true. And you can see for most of 2020, a lot of investors were still very bearish. And that sometimes is known as a contrarian indicator and is a positive for the markets a lot of times. You may have heard the phrase the market's climbing a wall of worry. That's kind of what we're talking about here. And a lot of times when investors get overly optimistic, the markets are due for some kind of course correction. And that can vary depending on what time frame we're talking here. But if you look, the last time this peaked in January 2018, which was a similar level to where we are today, the markets had about a 10% correction in 1 week to work off some of that optimism. And again, this is just one indicator, but it's something we watch closely. It has a pretty good track record. And so we will be keeping an eye on this, as well as other indicators as well. Secondly, we also want to talk about the fact that the COVID cases are still rising significantly pretty much all over the globe and here in the US. And what we don't know is if we're really close to cases peaking, as in the next week or two, or if it could be January or February. We're in the heart of flu season from here over the next 2 to 3 months, and we just don't know when COVID cases are going to peak, because it's a challenging situation with the flu also coming, and we just don't know how they're going to interact. So that's going to matter a lot, because if we're talking about cases peaking in the next couple weeks and then they start declining, that's something we can manage. If it's not going to be for 2 or 3 months, I think the market's probably being a little too optimistic here, because you're talking about extended lockdowns. Already we still have a high unemployment rate. So we need to see the way, again, in the long run, the vaccines, very positive developments, but we got to get through these next couple months. So we'll track that closely. There is one more issue that the markets will have to work through coming up, and that are the 2 Senate runoffs here in Georgia on January 5th. And again, with every election, you have to wait and see how the pieces shake out before you can kind of know, hey, what direction's the economy going to go, what direction's policy going to go. A lot of economists believe that divided government is going to be best for the markets here. And again, we just don't know what the outcome will be and what policy will be. But we do know this, that the markets right now are treating things as if we are going to have divided government. And I think there's at least a 50% chance that the Democrats do take both Senate seats, in which case things like tax policy, we don't know what tax increases could be, but we know if the Republicans do keep the seats, probably we would not see the tax hikes, and that's an issue that the markets are very sensitive around. So this is something, again, we just need to see how they shake out, and we really won't know until January 6th. I know this year Thanksgiving is going to be a little different for just about everybody, and I hope you do have a safe and happy Thanksgiving. If you're like me, you're ready to turn the corner, get into 2021. I think pretty much all of us are. The markets are certainly looking ahead right now to 2021 and better times ahead. But we are here to also manage risks, so we will continue to be on the lookout for some of the issues that could pop up and cause the market a little bit of volatility. But again, today, Dow hits 30,000. Let's celebrate that. And again, happy Thanksgiving to you and your family.